Yes, this is my man, one of the favorites, you guys. My man in the middle, we got Matthew Mickey. If you don't know him, you see him here. You were on with us, what, about a month ago or so, Mickey? When were you last on with
Yeah,
us?
it's been about a month. Yeah.
It's my guy. That's my guy. To the right, you got JD in the house. JD's got the live account open, ready to trade this. Real quick, if you guys aren't familiar with Matt Mickey, we call him Mickey. He goes by Mickey. I
Yep.
think your wife even calls you Mickey.
Yeah. Yeah.
Yep. So we're gonna call him Mickey around here. Mickey, please give us tell us about your background, tell us about your story briefly, and let's get right into these markets, man.
All right. Sounds good. So yeah, so I grew up in the foster care system back in the 80s. Wasn't a fun place. But it was during my childhood. Like by the time I was 8, like I had been abused in every possible way by foster kids, foster parents, all this nonsense. I was surrounded by just nonsense, right? I didn't know it was nonsense at the time, but like looking back at it, it probably was some of the best life lessons I've learned from those times of hardship. And so like ever since then, like my childhood, like my whole mission has been to promote hope, right? Because you can get anything done if you have hope, right? And so like one of my buddies, Kit, he goes by ICT Concepts. He says it all the time. We can accomplish more in a year together as a team than you can do by yourself in a lifetime. And like that's the kind of characteristics that I learned growing up. And then I joined the army the day after 9/11. Joined the infantry, did 20 years. I started off enlisted, did everything from be a drill sergeant to like, so if I look like I have an RBF face, sometimes that's the drill sergeant part of me coming in, and then deployed to Iraq, Afghanistan, spent a lot of time, deploying, doing field exercises, all that stuff. And then, while I was doing that, I was taking college class after college class after college class. It took me 13 years to get a bachelor's degree. And then once I made it to first sergeant, like I switched over to the officer and I got my master's and then I became an infantry officer. So during this time, every deployment we'd come back and my infantry gentlemen or boys, men, what barrel chested freedom fighters is what we're going to call them, would save up this money because you ain't got nothing to spend your money on besides, cigarettes and energy drinks over there anyway. So they would save up these large amounts of cash. And, before we deploy back home to the U.S., I'd bring them in and be like, listen, don't be F-tards and blow your money on strippers, booze, cars you can't afford 6 months from now, and the newest Jordans, right? And then we deploy back, like invest it, save it, pay off debt bills, be a responsible steward of that money you saved up because you put the work in for it, make it grow for you. And then we deploy back, and about 6 weeks after coming back to the stateside, I would notice like nicer cars than mine showing up in the parking lot. My Jordans were the newest Nikes, and I'd bring them in and be like, "Listen, you guys were F-tards. You you just blew your money. How many of you guys invested it, paid off debt, saved it like I told you?" And like one soldier would raise their hand, and I'm like, "That's awesome. Like, what you invested in?" And they'd tell me the CNBC special of the day, and I'm like, "That's so cool." But then as I monitored the budget month over month, like I would always monitor that investment because I had no idea what I was doing, and I realized like that soldier would have been better off, blowing his money in Vegas than invested in the market because he wasn't. So like that just pissed me off because I knew the blood, sweat, and tears that was associated with it, you know. So that led to me reaching out during the time it was like MySpace and just finding any way possible to find anybody with any kind of business experience to teach me how to be a trader so I could teach them. And so I did that for 12 years while getting my master's degree in statistics, while being an infantry guy. And I learned real fast in a hurry, like the objective of the game of trading is to take it as a profession in every way you do. Just like us as riflemen, when you got off the bus into basic training, I didn't just throw a rifle at you and take you to the range the same day. No, like we spent thousands of hours dealing with the characteristics of that weapon, the ballistics, how to fix malfunctions, et cetera, before, you know, like we took you to the range and then we would practice thousands of rounds, shooting rounds down range. Me as a drill sergeant, I always make a joke, and I always did back then too, is like, you guys hate me because I'm your drill son, so I'm gonna make sure when we go to the range, if you want to shoot me, you actually hit me, you know. But like trading's no different, you know. Like you've got to take this as a profession, and then like at year 20, I retired, and then you know I started working for a sell side organization. I helped with the T+1 life cycle of a trade development, and then I sit on a collateral and margin desk where in the fixed income space, like in the repo space, which most of your viewers probably don't know what that is like we make sure we have collateral, just like retail traders have a margin requirement, right? Nothing like if I go into the store and buy a pair of sunglasses and I swipe the credit card to pay for those sunglasses, right? And they hand me the sunglasses and I walk out the store, they're at risk between the time the money goes from my bank account to their bank account. Well, on Wall Street, nobody's ever, especially in investment banking, nobody's ever at risk. So, like if client A, Goldman Sachs, wants to buy 10,000 shares of Apple from me, right? They got to give me cash or collateral in the form of treasuries and bonds, right? Right. As the process goes through the life cycle of a trade, you know, like we've got to have risk. So as it takes 2 days, it's a 2 day process now. And so, like during that 2 day process, there's an executing broker, a clearing broker, prime broker, and a collateral and margin. Those 10,000 shares can always get those orders can be broken, right? And so at that point, like it's my job as the collateral and margin of these client ranges to make sure that we are never exposed to risk. So I'm the guy who margin calls other institutions. It's just not as crazy as it is in retail, but pretty much that's what I do now. And then like I have a Substack and I joined a group, two groups, right? That because when you actually understand the life cycle of a trade and how this all ties in and know it as in depth as me, you'll realize you have no freaking clue what the hell is going on. Like you have no clue what the markets are going to do. And so the best thing for you to do is to be disciplined, you know, consistent with your workflow process, you know, disciplined with your risk profile and just stick to your strategy and your rules. And so that's why like when you look at my screen, like you see all these probabilities and statistics, right? This is my workflow process to get to the game plan of what I want to do, you know. I didn't realize my screen wasn't showing. So yeah, that's my story, and this is where I'm at now. And like I always say, like retail traders have more of an edge being retail traders than anybody from Wall Street, right? Why is that? Because your job is to practice the same kick 1,000 times and make that kick as awesome as possible, right? Over any kind of market condition. We manage inventory. You guys manage risk, meaning our job is to facilitate a market, right? And always be delta neutral, right? That's what investment banking does. Your job, hedge funds, capital, you know, their job is to collect yield in the most safest way possible, right? So, yeah, that's me.
Amazing.
Hopefully, I didn't make you followers fall asleep because if that
I love
didn't,
it.
I'm about to with statistics.
Yeah,
All right, JD,
that's
go
an
ahead, man.
incredible story. Absolutely incredible. If you didn't know, Mickey signed on. He's going to be part of our daily levels crew moving forward too. So you're going to be
Yeah.
getting live updates daily from Mickey
Hell
during
yeah.
fast markets and during some other segments. Whenever maybe he sees something, he's going to throw it in our Discord channel. We're going to share it with everybody. So we're excited to have him here. I hope he's excited to be here. I know he talks very highly about Topstep, and we love having him here for
Oh
sure.
yeah.
But so, in the spirit of preparation, like you were just talking about, what does it look like setting up your game plan each morning? What are the steps you take when you're putting these levels
Yeah.
together
So
and preparing to go in?
because I know how volatile and crazy the markets are, right? Like I also know that me as an individual, you know, I can only control me and my game plan and how I engage with price. I can't control what these markets do. I can't sit here and try to predict. I know exactly 1000% what the market's going to do because, you know, like talking to some pretty big people in the markets who actually manage indices and some certain CEOs, I was like, does anybody really understand the pricing model 100% in the life cycle of a trade? And pretty much I got laughed at because it's such a global, you know, team thing, right? It's a nonstop because it represents economies. Within those economies, it represents, you know, the public companies within that economy. It represents every insurance company, every 401k. It's such an economic market, no matter what indices that you're trading or what market you're trading. Almost every single country, at least 42 economies, are tied into these systems, right? So about that, the only thing you have is to base your trades off of. So, like in the mornings, I wake up at 4 o'clock and I do meditation, stretching, workout, just to get my brain cleared and woken up. And then, like, I know from 5 to 7, it's my job to build a game plan, a statistical game plan of what I want to see on these, like, what the highest probable trade that can happen based off of what Asia did, what London did, and then like what yesterday's New York session did, and then like where we are on the higher time frame. Now, the last time I talked to you guys, I gave your viewers a kind of a glimpse of how I look at the higher time frames, right? It's the most simplest process ever, right? Like because like the higher time frame, because the higher time frame can take so long to do. Right, let's go to the NASDAQ since you guys are futures traders. Right, so I take previous month range 50% and NFP Friday. If we are below NFP Friday, then I expect to get below previous month 50%. If we're below both of those, then when I come in here, naturally, like I'm looking for the high of the day between 5 o'clock and 11 o'clock, right? At some point, that's where my skew needs to be, because in my mind, I'm thinking we should be looking for a close lower than the open, right? Just like, and we walk through it, the yellow boxes of the NFP, right? If we are above, if we're on the daily chart, if we're closing above previous month 50% and we're above NFP ranges, then I have buy triggers on and I'm expecting to find the low of the day, right? And that's how you identify if you're in a trend, and we're going to go more in detail off of this, right? So right now, we're below, on the daily chart, we closed below previous month 50% and NFP Friday. So I'm looking, I should automatically be skewed to the downside, looking for the high of the day from a statistical standpoint, right? And then, like there's an awesome community out there called the DR community, and basically DR is the initial balance, and they've collected all this data on like how Asia integrates with London and how London integrates with New York, and all the retracement data by day of week, all the extension data by time, and they put it all together in this awesome platform. So that does assist me. But a lot of these probabilities that you see here, right, are based off of something a standard deviation from Asia or something that happened in London, and then I pulled the probabilities for it, right? So there's a free indicator, right? Like, so let's look at this level right here, 19132, right? It's got a 79% chance to be hit between 8 and 12, right? Well, what level is that, right? Like, we can go to Trade and View, and you can look up the Midnight Snap by Austin Clark. And here's the cool thing about being surrounded by veterans who trade is like we did this for so long. Everything we did in the military was always backed by stats and rehearsals, mastering the fundamental basics, right? Trading's no different. We know that as long as what we are doing, how we engage with the enemy, how we perform combat life saving, the steps, what we address first, like if we have a casualty, we know that we have to engage with, bleeding first, right? Because statistically speaking, if we don't stop the bleeding and they're choking, they could bleed out before they choke to death, right?
Huh.
So like that's statistically, same thing with trading, right? So we know we have a process, a workflow process that we have to engage with that never changes, right? So like, for example, like one of these levels, let's see, this is called the Midnight Snap by Austin Clark, another Army veteran. You have the ability to put what time you want. So this is looking at, from midnight to 05 in the morning, what is the probability of us retracing to 2030 or 8:30 at night? right? And we can see, right, that there's a 71% probability over the last 77 sessions that we can pull back there, right? So I just do all these different probabilities based off of yesterday and Asia and London, and I decide based off the probabilities like what the day looks like. Now, I don't want to go too far in deep with this, but eventually, like, me and JD are going to jump on a call and I'm going to walk him through every step. And this is my game plan, right? Let's talk about this. This is just a game plan. This is just the highest probable trade that could happen today. It doesn't mean it will happen, that it could happen, right? So when you get punched in the face, right, are you going to cry about getting punched in the face, or are you going to, the person punching you in the face, they've exposed themselves somewhere by punching you in the face. The markets do the same thing, right? I have these lines in the sands right here that have specific instructions, right? And if the market decides not to take the highest probability trade, then it's telling me, hey, your levels are wrong, right? And its ability of telling me that my levels are wrong, guess what? Is also telling me where they're exposed at now, right? So yeah, I'm not going to be a seller if we can't reach this level during this time frame, right? I'm going to be a buyer because like the levels are holding and this downside projection where the probabilities are higher. The market live price, when you align historical data with live price, what you got to realize is live price always gets the Trump historical data. Your job as a trader is to be able to identify the ability that you're wrong because you're here to make money. You're not here to be right, right? So your job is to identify lines in the sands where it's clearly saying you're wrong for your game plan for that day. And then, because we don't trade these levels blindly, every single level here, right? I have multiple systems I've individually back tested and back tested my risk profile for to take trades around what the live price is telling me, right? I'll pause real quick and see if we have any questions before we go into the live price portion of it. And
Yeah, there were.
hopefully, this is helping.
I did see a couple things come in the chat concerning NFP, since that's such a big part of your system. Are you looking at price action just around the number release? It's significant.
No, not at all.
We have
Not at
NFP
all.
because we have NFP on Friday. So you're looking at the entire day's price action, not just like
The entire
10 minutes
day's
after the
price
release.
action, right?
Gotcha.
Because all I'm trying to see, because NFP is the first trading week of the month, and a lot of rebalancing and a lot of things happen from a quant side and from a market side during that first trading week of the month, right? My job is just to take a fixed constant variable, right, during that first week and to measure where we are in relationship to the previous month, right? So in this case, this was the whole day's NFP, right? This was, right? So it's telling you kind of from a higher time frame approach, right? Let's go through this real quick, right? This is since October, right? So we're in the summer months, right? And we're drifting down, and then all of a sudden November happens, and we start closing above the previous month's 50%, right? And then NFP happens, and then we can't get back into the NFP range. What is that telling us? That's telling us for now, we should be looking for the month to close higher than where we are now in this month. And like, when you look at these pullbacks, you should be looking at them happening between the first week or the last week of the month, right? Right? Because you're trying to see if the market's, if it's swiping back down into that NFP range, then there's a high probability that you're going to hit the previous month 50%. There's a lot of things around that previous month 50% that shifts markets, right? So like, why do I say you should be looking at it to happen I'm sorry, I'm stuttering. But why should we be focused on what week and the relationship between NFP and previous month, right? If you go to a weekly chart and you just go on a 5 EMA, right, and you measure, right, how far we get extended on week 2 and 3, and then we pull back to that 5 EMA. Every month, like it usually that pullback from that 5 EMA after it gets between 2 and 3% on the NASDAQ at least, right? Week 4 and week 1 of the month, we usually are slowing down and pulling back because the market got ahead of itself, especially if it's in a bullish trend or a bearish trend in market, right? So it's just a system to tell me, am I in a trend? Am I reversing? Or am I, ranging, right? So like right here during the month of February, right? The fact that we swipe back into the NFP range, we're not like selling bear markets, right? Because we can't even take out the previous month 50%, but it's telling us that the market is slowing down and it got too far ahead of itself because January and December just ripped, rallied, and roared, right? And then when March comes around, we still can't close below previous month 50%, but look how deeply we're swiping. So that's telling us, yeah, there's still the fact that we can't close below NFP, but it's still slowing down. In the month of April, we instantly start getting daily closes below the previous month 50%, and then we get below the NFP Friday. So we know now the market's reversing, and now we're going to start doing a trend. Right? As we go into the NFP, right, I'm going to be looking at Friday's range in relationship with this midpoint, right, to tell me, is this a rotation into small caps and bonds, or is this an actual reversal for a slowdown for the summer month, which has that seasonality effect that's associated with it as well, right? Hopefully that answered those long-winded answer.
No, that was a great explanation. Thank you so much. A couple people were asking about the midnight snap indicator that you looked at too. It looked like, was that a custom indicator from TradingView? That's not.
I think it's a custom indicator. My buddy Austin from the Wolf Trade Pack group, he had that built. So you should be able to just be able to type in midnight on TradingView.
Mm-hmm. Exclusive to TradingView though. So for everybody listening that
for
ask
now
about
it is.
Yeah.
Once I get synchronized with you guys, I'll give you guys a code and you guys can put it on TopstepX.
Awesome.
If you want it.
Love that.
Right? But the
Absolutely,
cool thing about
Mickey.
this is like,
absolutely.
Well, my biggest thing is like, the people who trade retail, who don't trade for capital, hedge fund, or investment banking, or whatever, right? The people who actually trade on Topstep, guess what? They're working class individuals. They're just trying to take a responsible growth, right? And like, why would we target them like a wolf? And why would we, like, we're here to give them everything that they possibly need. And so this indicator, right, is designed specifically and is free to let you say, like, let's say we're a supply and demand trader, and this is, I don't even know how to trade supply and demand. I'm more auction theory and statistics. But let's say this is a zone right here, right? That happened at the 9 o'clock candle, right? So now what I can do is I can come in here, and let's say we want to see the probability of us getting back to this zone, right? And this is what Austin from Wolfpack Trade Group gave retail the ability to do, right? So this is at 940. So we're going to put 940. And then it's past 12. So let's see what the probability, 13 to 1600 or 1615, right? And we just click OK, right? And we'll let it load, and it'll give us the highest probable. So we know that there's a 77% probability that we make it back up here, right? But you can't just trade this blindly, right? And you got to realize this isn't even updating. Something got jacked up. It's like NAN is telling me that it's not working good.
Can I ask you a question really quick, Mickey? What is the
Yes,
probability threshold? What's the probability threshold have to cross for you to actually pull or take the trade? The 77%, is that high enough? Or do you like in the 80s or 90s? What percent probability do you like for you to actually take a trade on? What number are you looking for?
So for me, it has to be a higher one, because like I told you before, like, I suck at trading size, and this is an exercise that I do. So yeah, this isn't updating. Austin, if you're watching this, you better update your indicator.
Austin.
Austin. But yeah, like, it doesn't tell us this, but we can see that the probability is updating, and it's a 30%, right? Between 1300 and 1600 of hitting this 940 level. right? So for me, like, let's look at a very awesome edge out there, right? Let's look at this right here, right? And this is not an indicator, right? We know that historically, right, if we take the initial balance of Asia between 1930 and 2030, right, we know, let's measure that out. 1930 right there to 2030. That's not 1930, this is 1930. So right now, this is the 1930 to 2030 Eastern time, right? We know that over the last 4,280 days, right, we went above or below this. And out of those days, guess what? At between 2 and 3 o'clock in the morning, 1,000 of those days, we breached this midpoint and this high. We know out of those days, that 3,000 days, between 3 o'clock and 9 o'clock or 9:30, we've hit the next level, right? So that has like a higher time frame probability to it, is what I call it. That tells me all I have to do now is measure if I know that this is going to go, down and then return to the other side of that, then my job is to know what kind of trader I should be in this market and where I should be targeting, right? And so, like, because that has a higher time frame probability associated, just like the midnight snap, right? The midnight snap has a 67% probability between 8 and 11 to return into that midnight. 67 doesn't seem like a high probability, and it's close to the 50-50 coin flip, right? But there's three types of ways you can engage with price, right? And this is one thing in my Substack that I'm writing about, right? You can, let's say you have 10 MNQ contracts, right? That you have to, you're mandated, you're like a professional, you're mandated to make these contracts work, whether you want to trade or not, like get them in the markets, right? And so, like, you can do it three ways. You can shoot them all at once, right? And then set your stop where your thesis is completely wrong, and then target where your thesis goes, right? Or, and that's, how do we trade that one? When should we trade that? That's when we're in a range in market, right? Like, and we're going to talk about that. When we're in a range in market, we should be shooting all of our shots at once. When we have a clear indication that we're in a range in market, which happens 70% of the time or 80% of the time in the indices, we trend, right? Then there's another way we can do it, right? We can cost average, right? Which I know is MP's worst saying, right? Into winners, right? When do we want to cost average into winners, right? Now, if we're in a range in market, what does that mean? That means buyers and sellers are content with this range, right? That's a liquid market. That means they're happy, right? So we should be happy and do exactly what they do. When we're in a trending market, that's an illiquid market, right? ICT people call it distribution or whatever, right? But it is what it is, right? You're in a trending market, right? So use the trend as your friend, right? So in that case, when we're in a trending market, we should be adding to our positions and not just shooting all at once, right? And letting ourselves get smacked in the face, right? Like, or not getting just taking it at 2R versus what could be a 10R trade, right? Right. So, like, how do you do that, right? Like, one thing that I do, and before we go into what I do, like, we're going to talk about the last one, DCA into a loser, right? Right. When do we want to DCA into a loser, right? We want to DCA into a loser when we're expecting there's a high probability reversal, right? Because we need to give ourselves a cost allowance. So the difference between the three ways to engage, when you're shooting them all at once, right? Right, you should have a line in the sand that's based off of your thesis, and that's where your stop goes. And it should be worth more than your profit should be worth more than your risk, right? When you're DCAing into a loser, you need a cost allowance, right? Right, because And when you're DCAing into a winner, right, put a cost allowance, how much that trade's allowed to lose, right? And then your biggest job is not to mess it up by trailing your stop too soon, right? So there's three types of markets, right? We got reversal markets, we got trending markets, and we got ranging markets, right? And there's three ways that you get into the markets. Line them up, right? One exercise I had to do for a mentor of mine, right? He did the same exercise, and I had to do it a lot, right? I had to take a 4 hour period, right? And I had to do each one of these series, and I would flip a coin, right? Heads or tails. If it was heads, I went long. It didn't matter if price was going short.
Huh.
It didn't matter anything. Like I had to make money being a short seller, right? And then I had to series two. I had to flip the coin, heads or tails. Tails, I'm short. Now I have to learn how to I have to do this test making money as a loser, like DCAing into a loser. So I had to find, if price was going long, I had to find every single reversal within that 4 hour period to, DCA into a loser, right? Same thing with the winners. Like, did this test, right? And realized, right, after doing hundreds and hundreds of reps of this, right, like there's a time and place to be each one of these, right?
Huh.
And that's what retail struggles with, right? How is it possible that those hedge funds that short the indices year over year and make money, right? They're DCAing into losers at the reversal times. They're using like the retracement to midnight, right? Like if we know that there's an edge between 8 and 11 to retrace to midnight, guess what? Like they're DCAing into losers as London's going up, like just like you saw today, right? Like they're DCAing this whole move, and then finally at between 8 and 11, it snaps back to that, and they make money. It always blew my mind, like how can the short funded mandated hedge funds and capitals make money on the Nasdaq? And once I did this exercise by a close mentor, right, it made sense, and it's all about how and are you positioning correctly based off of the type of market you're in. So let's say you don't know how to identify the markets, right? Keep it simple, stupid, right? Like, remember that's like a thing, right? So
Mm.
what you can do, right, is a real good thing too, right? What you can do is you can put, this is on the 1 minute, or this should be on the 1 minute, right? This is on the 1 minute. Let's delete all drawings so it doesn't distract, right? These orange boxes are representing the hour's range, and the yellow is the mid of that hour, just like on the NFP Friday and the previous month, 50%. Mickey sticks to his game plan and how he trades, right?
Yeah.
Right? So if the hours are doing a line like this, somebody in the chat, what do you guys think? What kind of market is this? It's a range of market, right? So we should trade it as a range of market, right? We're not targeting 5 gazillion billion handles up here. What if our higher time frame and our statistics are telling us we're in a higher time frame market? Then when we're in this range, we need to be a buyer. If our higher time frame is telling us to be a seller, we don't buy this range. We only sell this range, and we target low hanging fruit, previous hour 50%, whatever, right? Now, like if we notice a jump, right, we're heading up, and then we jump down, right? Obviously, we're in a reversal, right? I issued this in my Substack at 6 o'clock this morning, right? This was my data, right? I said this is the high day of the zone, should be between 4 and 12, right? Because remember, I was looking for the high of the day to be between 5 and 11 o'clock, right? So as we're approaching this, my job is however I want to enter and engage with price. If I'm expecting a reversal, my job is to be smart and like let's say I had an entry right there. Like if I have 10 micro contracts that I have to engage with price, do you think it makes sense to shoot all 10, selling them right here, hitting the offer right here? No, like I'm going to use a fourth of my risk per trade. Like if I'm risking 2.5 because this is an A plus setup, right? Like the first 25% of that 2.5 will go on here. And then does it make sense just a dollar cost average 5 handles above? No, absolutely not. If price goes this way, guess what? I'll take profits off of 1 micro versus the 10 micros. That's the game we play, right? So just aligning yourself correctly, right? And if you guys, well, you guys will get my levels anyway, right? But like by 5 to 6 o'clock, and I've been doing this system specifically for over 9 months now, and I have not changed any variables whatsoever. I used to post them in my Discord. Now I'm doing this Substack so everybody can get access to it, right? Because my biggest thing is like, how do I put the biggest probability on the charts, right? So right now, if we know that we've hit the average daily range, right? Because it's all about expectation management, right? Responsible growth and realistic expectations. That's what the people who trade for a living, that's the mindset, and pulling stats into your trading, right? So if we know that we've hit the average 10-day range, right? And another thing, when you use ranges, it doesn't make sense to collect all the data since 1999. Your back test for your individual strategy, you should collect all the data to make sure that strategy survives all kind of market conditions. And if not, you can pick up the confluence of those market conditions. But when you're doing range-based trading, you have to align those ranges with the quarterly market condition you're in. So for this case, like the average daily range, I use 10 days average, right? When I look at my weeklies, I'm using the last 8 weeks, right? When I'm looking at the lower ones, right, I'm using 15 weeks, right? Like this is the average distribution from 12 to 1600, 15 weeks, 0.70%. Why do we use percents and not standard deviations and not actual handles? Because the NASDAQ in 2019 was trading on average maybe 100 handles a day. In 2020, 1,000 handles a day, right? So you have to align something up that is static through all these crazy markets, right? So now, like, should I be selling this market if we've already hit all the historical data lows, right? No, I should not. And if it continues to go lower, cool. Doesn't mean I have to engage with it, because my systems and my business plan says once we hit this level right here, right, there's no more trading shorts, right? Am I allowed to trade longs? Yeah, once we get back over here, right? And then what's my risk per trade? 0.5%, right? Because this is a 2.5% risk per trade. This, any longs taken this afternoon, 0.10% to 0.50% that I'm going to risk per trade, right? It's not worth my capital, right? Right now, like, I'm in the beginning stages of, like, being funded with you guys. And guess what? Building a buffer over time is more important than slinging size at my account over time right now, right? So, like, that's what I had. I'm going to open up because I told you already, like, you get me talking, I'll talk forever.
I love it.
I don't
Go
even
ahead,
know if
JD.
the audience
Dropping
likes it.
gems out here, man. Dropping gems. Go ahead, JD.
Excellent stuff. Yeah. We'll definitely clip this segment for everybody asking. Yeah, we'll have this as a standalone segment on our YouTube channel. Mickey's currently trading in 2 XFAs here at Topstep. So he is on the funded side here. So listen to what he's talking about. So right now, we're not shorting this NASDAQ based on this data.
Yeah.
And again, this is...
But look at this. The hourly mids, right? This is a trend market, right? We can't get back above previous hour mid. We can't get back above previous hour mid. We can't get back above previous hour mid. Right now, we sit on our hands. Unless you're a scalper, you have some kind of big, deal. Like I use the 5-9 because with me, there's always a range. Whether it's the daily, the weekly, whatever, there's always a range, and there's a constant within that range because, like, I like collecting statistics, right? So right now, this is minute 5 to minute 9, right? This red dotted line is minute 9. That's a fixed constant that will never change, right? And now I'll watch order flow around this to see if we get a reversal, right? And until we get that reversal, we're above minute 5 through 9, and minute 9 being my entry zone, right? And we're above previous hours 50%. Like yeah, sellers control the market, but now we've extended over the average daily range. The probabilities of continuing to go are slim to none, right? So now, and this is a one that I'm having code up right now. If it decides to work, let's see, we're on the 1 minute, so we need to put this on the 1 minute.
Real quick market update, Mickey. While you update, I'll do a real quick market update here. Last trade in the ES 54.59, low of the day 54.54. NQ kind of in the range. We're talking about that. I finally found a bit of a range here in the NQ. Low of the day 18,902. Last trade 18,916. Just see some buyers coming and stepping in crude and gold as well. High of the day in gold 24.42. Last trade 24.39. Crude kind of in the middle of the range right now. So that's trade $75.19. High of the day. We are above $75. Low today, 74.59. Go ahead, Mickey.
Yeah, but like my biggest thing is number one, iron sharpens iron. Be careful with who you surround yourself with. You know, be supportive of everybody. Like I see all over Twitter, right? Like constant wars between what theory is the better theory of what theory and blah blah blah. And it's like, guys, you're on the same team,
Exactly.
right? Like you guys should be helping each other. Like, how does your theory help my theory? And what's the statistical probabilities of it? Like I hear all the time people say, this is a high probability thing, and it's like, can you show me the data of that? And they can't, and it's like, remove probabilities out of your mouth because that's a recency bias, meaning it's happened within the last 3 months, and that's the market condition that supports this kind of strategy, right? But like when you have a fixed constant in a range, so right here we're doing it from the hour and using the 5-9 box, you can build cool stuff to measure that data around, right? So we're at the 12 o'clock. And I know we're almost out of time, so I'll leave this indicator that I'm building for the communities alone. But basically, real quick, this will allow you to fix the constant, put your standard deviations, and then it will do a look back and tell you the probabilities of those levels getting hit, the other side of that standard deviation getting hit, and where you are within price acceptance of that level or rejection. But still working through that, and that's going to update every day and every hour. Right, so now look up, if you're really serious about trading, stop calling, well, we won't go into that. Figure out what the correct terminology for things are, right? You have MAE distribution and MFE distribution. Look that up and then take that fixed constant and collect data around that. MAE, so if we're using the hourly, right? This is the hourly candle, right? Let's extend that. Right, and it's a green one, and it's for a specific hour. It's even for a specific day of the week, right? If this is the open and it wicked down and came up and closed up, this would be considered the MAE. ICT traders call it the manipulation. MFE is known as the distribution, right? And guess what? This little wick right here from the open can be measured with statistics by day of the week. And then you can start saying, like, I am now taking, like, once we press the open, like, for example, right, over the last 4 Tuesdays at 12 o'clock, right, from this yellow dot line, the open, it has moved, the MAE has been 0.5, right? And if we look, the first breakout, let me zoom in because I know your viewers probably are having a hard time seeing it.
You the man.
Right? So it hit 75% of the last 4, right? Let's get some more data because 4 is not a really good number. Let's get the quarterly data for 12 o'clock on a Tuesday. Right? We can see that the MAE, 59% over the last 44 Tuesdays, 0.1. Right? So as we approach 0.1 from that yellow box, let's draw out 0.1 from this yellow box, the yellow dotted line, right there. When we start swiping back down, and I'm just using this as an example because it's the hourly, the easiest.
New highs in
0.8.
gold.
Listen,
New highs in gold, new lows in NQ. Sorry, go ahead.
right? So all this is doing is giving us expectation. So if I'm trading this hour, now I'm just doing expectation management and what kind of trader. So we've talked about a lot of stuff today that probably is brand new to everybody's ears. But feel free to reach me on Twitter. I have a Substack that I put out every single day with my levels, and where we are. Right. So
Sweet.
this one is from today. I published this at 6 o'clock, and it gives you what to think about and how to manage that expectation management. And then I do a weekly update, and then I call it Sergeant's Time training, where I actually teach you exactly in a slow and methodical way exactly what we talked about just now, but giving it to the viewers to actually do homework and learn it themselves.
Hey,
Yeah,
real
that's
quick,
awesome.
Mickey, what's your Twitter link? What's your Twitter handle so we can share it with the chat?
It's Matthew W. Mickey 1. And
Matthew
my name is
W.
Retired Captain Sergeant Backbone because I've filled both roles in the military.
Matthew W. Mickey 1 in the Twitter. Sweet. Thank you so much. Hey, so I got a question for both of you guys. How's this going to work between you two? I don't know if you guys hashed it out fully thrown out, but we're just spitballing. How's this going to look between you two guys with the levels and such?
Yeah. So far we've been communicating via email in the mornings,
Cool.
but I'm looking forward to getting together with Mickey in the mornings, probably starting next week once everybody's back from vacation and here we have a little more time to spend together. But yeah, I'm gonna learn as much about this as I possibly can before I start sharing with everybody. We're getting Mickey involved in our private Discord channel, the Daily Levels crew. He's gonna be posting some of the stuff in there. But it's great that everybody gets to learn about it first, so they know what they're looking at. They know what Mickey's looking at when he shares those kinds of levels with us. This,
Mm-hmm.
you know, this unbiased, purely data-driven statistical information it's just a gold mine for retail day traders like us. This is the kind of stuff I think everybody needs to know, and I'm pumped that Mickey's here to
Yeah.
share it with us. This is going to be great.
And
for
listen,
sure.
like
Big
there's
time, man.
plenty of communities that actually do it. Like DR is like phenomenal. Like M7 is on Twitter and he just, I won't use that word, but he forces his traders to back test, forward test, like learn the system, learn the probabilities, all that stuff. Pack trade groups, like he's the Army dude, Austin Clark I was telling you about. He will not let his traders trade anything other than the midnight snap, right? He won't teach them until they've mastered that statistical probability. And he's like, this is all you need. You're making money. Stop trying to be a liquidity wizard and somebody who knows who promotes that they know everything about the markets, and like that's all nonsense. You're here to make money, not be right. So start acting as such. I'm telling you, like when you get around veterans who are traders, right? They don't bullshit you. Like they tell you exactly how it is, and they don't hide their trades. They trade live. Like if you fail, you fail. Like if they lose, they lose. They're like, I'm not gonna be a baby. It's a business expense, Like it happens,
100%. Mickey, I got a question for you. As markets are still selling, seeing more sellers coming in here. 54.50 last trade in the ES. Nick for a tick in the chat looking for 5,400s downside. I think he's got some option data to back that up. New lows in the NQ, 18,863 new lows. As we continue to sell off, the sell off is on. Sell off is on equities. Mickey, your fun question for you. How does being so statistically driven, how does that translate into your personal life? You're very hyper rational. How does that work for how does that work in the personal life? Because I suffer from that as well. I get thrown in my face that life is not just one big statistic. So how does that work for you in your personal life?
Listen, like it is
Yeah, I know.
horrible because I have a wife
too,
and
man.
a daughter, and
too,
they're
man.
like, I'm a math nerd.
Same.
Math. They hate math. They think
don't
math
care.
is of the devil. My daughter one time told me, "Did the devil create math? Because it's that stupid." And I was like, "What? Are you calling me the devil? Because I love math." And so it's hilarious. It's like my wife and daughter, they can write like great. They're great with their writing. They're great with like arts and all that food stuff. Like I'm like eating crayons, like knocking,
Man.
like eating rocks and just like a man. And I'm like, golly, I love statistics, right? Why?
Me
Because
too, man.
so like I struggle with it big time because like I'm always figuring out the probabilities, and it
Exactly.
just seems crazy.
Me too, man. Me too. I get thrown in my face all the time. Life isn't all math, Andre. And I go, it kind of is. But
Yeah.
it doesn't win you. It doesn't win you arguments. For whatever reason, it doesn't win you arguments. It just makes you look like a bleep hole. So, anyways, we are still selling off here. We just broke release the 54.50 in the ES. Selling lower here in the 18,845 new lows. JD, take it away. That was awesome stuff. A couple minutes left, but I'll get out of your guys' way. You guys close it out from here.
Yeah, we just kissed Hoag's weekly kickoff low here at 18,844, moving just a little bit below it right now, but sort of hovering around. So this is a key inflection point. Hoag likes to talk about these levels as areas where he expects longer term, higher volume traders to maybe start possibly considering adjusting inventory. So we're at that weekly kickoff low right now, 18,844. We'll see what happens around here. But yeah, next week we're really going to get the ball rolling with Mickey, bringing in some levels every day. Looking forward to it. Yeah, it's going to be great.
So if you look over the last 16 weeks on a Tuesday from 12 to 1600 or 4 p.m., sorry, you can move from the 12 o'clock high to low, historically has moved 0.72%, right? So you still have room, even though it doesn't synchronize with the daily range, right? We'll overextend it to the downside. It can still, remember, live price always trump data. You're just live price with it and not against your high probability trade, right?
All right, guys. Well, we can get back to these markets. Gold making new highs, 24.44.5 last trade, new highs there. New lows in the ES, new lows in the NQ. The selling is not done. Coming up next, we got shoulder tap. Mick in the house. Who we got? Mick and Jack in the house. And we got more JD. JD, are we good on group coaching questions?
Let me take a look real quick.
Okay, we'll get that form. Anyways, I want to thank you, Mickey, my man. We're gonna have you back on. I'm so happy you're gonna be have greater a role here at Topstep. Let's get you on more. That stuff was so deep. The chat was loving it. We got your socials up there. You guys, we got more Mickey coming here on TopstepTV. JD, let the chat know if we need more questions. Yeah, no, thank you, man.
One last gold nugget. One last gold nugget. Power hour, 1400 open. Do we retrace?
Do we? What do the stats say? You tell me. What do the stats say?
It's pretty high every power hour.
Long.
We retrace back to 1400 open. So remember, keep that in mind.
Man. Dude, Mickey, you are the man. JD, we got more JD coming up with group coaching. But up next, we got shoulder tap in the house. I hope you guys really appreciate that because I sure as hell did. Click like, click subscribe. More Mickey coming up. We got shoulder tap coming up next. Let's go. Thanks, Mickey.